What's good? Back again with another video. We just gonna jump right into it. So today, let's see. So I know, I believe a couple videos ago I was talking about gold. I wound up seeing $1,500, and I pretty much seen a retracement. We were due for a retracement. Pretty much a daily candle. Let's switch over to the daily chart. So this is a daily chart, and pretty much what it seems so far is that we simply produced a daily candle. We were overdue for a daily retracement because if you can see here, we've had days, bullish days, and then we pretty much, hey, it was time for a retracement, time for a pullback, time for a red day or bearish day. So I wound up, thank the Lord, closing out some trades. Let's see where we were at. All right, so you can see here. So let's see. So these three here, I know I had three positions going, and I had them all at break even, and I was just hoping that we didn't have a full retracement down to around 10%. Um, I just didn't want a 10% correction because I had positions open. But hey, thank the Lord, they wound up closing out for profit. Uh-oh, it's time to charge this computer. Okay. But so we had pretty much, let me see, starting, I guess what's today, Monday, pretty much Sunday up until today, we pretty much been having a push. And with this push right here, I was able to close out a 1 to 3 for this trade. And then we had another push up here, and I was able to close out for about a 1 to 3 on this trade. So that was about $600 within about 8 days. It would have been around if I would have closed out up here when I initially, um, you know, should have, or when I initially thought about it, and I seen this anomaly or this gap in the market, and something told me like, man, it might be a good idea to close, but I was trying to squeeze it out, um, squeeze out some more profits. But I came up with a strategy not to do that again. As soon as I hit a profit target, boom, I'm getting out. I'm not going to stay in here and try to squeeze as much, profit as I can. That's not proper management. Uh, so I had 1, 2, 3 trades. They all closed out for about a 1 to 3. It was about $600. And so I'm in on another trade right here. I entered this today, and I plan on entering another trade in gold as soon as we close above here, or as soon as we get a bullish candle above and break this high right here. I plan on getting it again. Uh, and also, we had very nice push on the NAS, the US 30, and the S&P 500. Very nice push. So for the NAS 100, um, since we had already, if you can see this key area right here, since we already, or price is already pushed above here strongly, I said, you know what, I'm going to jump in preparation to break these highs. So I have one position in right now in preparation for breaking these highs here, because in my belief that once we break those highs, we're no longer in fear of the market retracing to a full 10% correction, or a pretty much bear market to 20%. So that's just my thought process. US 30, I'm at least waiting until we break this high here, or get around to this key area before I get in. I don't want to get in right now because this can easily retrace or find some sort of demand here or liquidity here, retrace, come to the support or break through support. It's just too much uncertainty right now. The same thing with S&P 500. Matter of fact, I can't say that just yet. So I did get into a position right here. So I'm in one position right now in preparation for this high to be broken. And at least for right now, what the plan is that once these highs are broken, I plan to get in another position, and just risking about $100, and I'm gonna just let these sit. So the Nasdaq 100, the US 30, and the S&P 500, those are gonna let those sit for a little longer. It's still a 1 to 3 risk reward, but they're gonna take a little longer simply because my stop loss, what I'm risking, it's how can I say it? It'll take a little longer, so it won't be as quick as gold. What I find about gold is that a 1 to 3 can happen within a day, within a couple of days. So those are a little quicker, and these indices, the Nasdaq, the US 30, and the S&P 500, is just going to take a little longer, and I am fine with that. I'm just making sure that I can position trade correctly. So that's it with those. I am also in forex positions right now. I kind of changed up the. I know the last video I was talking about uh, pretty much pattern trading and looking at different things. Yes, that I do plan to do that, but I also uh, started incorporating a little higher on the time frame as far as looking at the monthly, looking at the weekly, pretty much doing a proper time top down analysis, and uh, and also incorporating the Fibonacci. So if we go to the Euro USD, so we go to the monthly chart, we can see here. And yes, this money is it's not a lot that I'm risking. I have about 400 some of the dollars in this account, which is fine. I'm still looking at different things and trying to make sure that if this is kind of what I want to stick to. It's still trial and error, simple. So if we look at this monthly chart, we can see here that this is a key area. If we go to the line chart, we can see that, and so that's why you see I drew a support and resistance bar here, or a horizontal box here, rectangle. So you can see this if I stretch it across. Price tends to interact with this on the monthly chart. So and even if we go down to the weekly, you can see more interaction, more touches on this key area. And so we came to this key area right here. And so I said, okay, well, in my mind, we're looking potentially for a retracement. And so let's see, what I did was, the Fibonacci, I took out the Fibonacci tool here, and I have it modified to certain numbers here. And so pretty much what we're looking at, I noticed that price likes to interact with the 50, or it likes to pull back to 50%. So I said, okay, well, since we can't, this is a daily chart, we pull back 50% here on this chart. So I was like, or on this, price action right here. We pull back here, and so now we go down to the next lower high and lower low. The market retraced 50%. It actually came up to the 79%, if you can see, or close to it. And then, I mean, we take that one off. Then we have the next from the lower high to the next lower low. And so I said, you know what? We already at a high time frame key area. It looks like we're rejecting this area. We also took liquidity on the monthly. So for right here, we got liquidity. Market took liquidity. So I'm like, okay. And on top of that, we are still in premium as well, and we have not went to discount yet. And so we take this tool. This is my premium with discount tool that I use or modified it for that purpose. And as we can see, we're still in the premium, and at this line right here, you can see we haven't hit discount yet. So that's pretty much why I got into this trade. It's going to take a while, and I'm fine with that. I'm fine with letting it sit in there. I'm not in any rush. I'm a swing trader pretty much, so I do not mind it sitting in there. I'm in some other trades, pretty much with the same similar methodology or similar thought process. We're at a key area on a higher time frame. This is a monthly chart right here, and we're at the market is pulled up to that area again, and so and then we have rejections here. If you can see, we have rejections here. And so I was like, okay, well, hey, we might be looking for a downward move. So in anticipation for the potential downward move, I, took my Fibonacci tool out, boom, here, and we're at a 50% retracement. And so I said, you know what? I'm going to jump in. I do not mind waiting. However long this trade plays out, that's fine. I'm going to jump in, and it's similar or we talked about this trade. There's a reason why I'm in this trade. We already went over that. So because we are already at 10 minutes, and pretty much this one here, the same the same thing. High time frame, key area. We had a Fibonacci tool. We traced 79%. I got in anticipation for a downward move until at least we get to discount, which is right here. Because if we take out the premium discount tool, you can see from the lowest low or from the low to the very high, we still have some more to go till we get to the discount. So those are the trades so far. That's what I'm looking at. If you have any questions, just let me know. I'll holler at you.